Thanks for staying with us here on the marketplace. The Ghana cedi ended last year with a depreciation of a little above 9% on the retail market and almost 4% on the interbank forex market. This performance has been described as mixed by analysts and currency traders because of the spread between the retail and interbank market. In 2020, the local currency registered about 3.9% decline in value to the American dollar on the retail market. Senior currency analyst at DataBank Research, Courage Marty, tells Joy Business there is an uncertainty of the outlook of the cedi, and that requires further action from the Bank of Ghana to help stabilize it. Courage joins me with some more insight. Great to have you on the market, please. Happy New Year to you, Courage. 9% depreciation on the retail market, 4% on the interbank forex market last year. How bad is that?
Well, good afternoon, Daryl, and Happy New Year to you and the team multimedia, and Happy New Year to the discerning viewers and investors around the world. I don't think this is catastrophic. It is not the worst we've seen, as much as it's not a very good feeling given the implication for cost of operation for businesses and consumers' exposure to high prices. It's not the best, and it can be better. But against historical trend, it is definitely not the worst we've seen. And if you also situate it within the context of the fiscal challenges we've had, especially since the pandemic broke out, you would also say that it's also not that catastrophic. But again, we must emphasize the fact that it shows that our currency is still vulnerable to shocks from external markets and shocks from domestic economic landscape.
And you say there needs to be further action from the Bank of Ghana. Now, we are told that the Bank of Ghana will auction $450 million in the first quarter of this year. And the move is expected to boost the performance of the local currency against the dollar. Is that enough?
Well, so the last thing I want to do is to blame the Bank of Ghana or hold the Bank of Ghana solely responsible for the performance of the local currency, as much as the central bank's core mandate is price stability, including exchange rate stability. But we must also understand or agree that there is a role for central government or fiscal policy, but always the central bank tends to play the lead role. And I would say that that particular measure that the central bank has been implementing since late 2019 has been one reason why the currency performance hasn't gone out the window since the pandemic broke out. And I would say that the calendar that has been released, as you rightly stated, is also another show of commitment from the central bank that they would strategically intervene as they have been intervening in the past few years or months. Now, if you look at the amounts they want to inject or auction on the forward market, and you compare it to the first quarter of 2021, that's about 50% increase to what they did in the first quarter of 2021. It tells you that the central bank is signaling commitments to exchange rate stability. But that does not mean that the cedi would not move up or down because it's a flexible exchange rate regime. We also need to understand also that if inflation continues to run high, again, central bank will take the lead role on that, but the government also can play a role, especially given the fact that the supply side situation that is driving inflation these days. So if inflation continues to run high, it's also a risk to exchange rate. And so the central bank will also be looking at bringing inflation low, so that in addition to the interventions they will do on the supply side of the FX market, that could also help ease the pressure on the local currency going forward. So I would say it's a very good signal to the market that the central bank is committed to exchange rate stability, but the central government also need to play a lot of role in that.
Speak about the role of the central government. You talk about fiscal policy. I mean, the finance minister outlined the priorities for 2022 in the budget. Looking at what the plans are, do you think that we're on the right path?
Well, for now, they are proposals, and proposals are only good on paper. We need to see implementation, and on paper, they look good. But then we need to see implementation to be sure. For instance, if you look at why inflation has been running high, it's as a result of supply side shocks or bottlenecks, especially what has been known as the global disruption to global supply chain. So what you want to see is that the budget will focus on those areas where we've seen bottlenecks in the global supply chain. First of all, you want to see investment that goes into the production of food and the value addition to food. Because if you look at the component of inflation, there's been so much volatility in the food price index since the pandemic broke out. So you want to see government intervention in agriculture and value addition to agri-produce. Having said that, you also want to see a situation where, the land borders are still closed. Now, admittedly, it's only closed to persons and not goods. But we also need to understand that persons need to travel with goods, as well as travel for inspection. So as long as the land borders remain closed, this is also an upside risk to inflation. Now, the authorities have also said that they need to vaccinate at least 20 million Ghanaians before they can open. So then there's a risk to that side if vaccination remains low as we are saying. So we also need to quicken the pace of vaccination, especially educating people in order to reduce the vaccine hesitancy that we have in the system.
Outlook is uncertain. You want to try a projection based on the factors, internal and external?
Well, so given the fact that I'm not speaking to only sophisticated investors, I have to be mindful of the broad range of people who would be listening right now. So I will shy away from giving any particular figure. All I will say is that we trust the central bank to remain committed to price stability in the goods market and in the foreign exchange market. And they have already signaled that in the calendar they released. But we're also mindful of the risk to the currency, especially given what we expect to happen in the advanced market. So foreign investor movement and development in the advanced market could also pose pressure to the currency. In that regard, we think that there will still be some form of depreciation despite the central bank's intervention. Of course, we practice a flexible exchange rate. The fiscal situations have not left us. But then we think that the depreciation we will see for next year will still be something in the single-digit rate of depreciation, probably below 5% again, or around that level.
All right, Courage Mate, Senior Economic Analyst with Data Bank Research. Appreciate your thoughts this afternoon.